Well, let's take a breather now from equities. Let's take a pause and look at what happened yesterday. We had the Nigerian Treasury bills auction, and we have the results. Chukanwa Chuku, Chief Dealer and Group Head Trading UBA, is with us this afternoon to discuss that and more. Chuka, good afternoon. It's good to have you.
Good afternoon, Will.
Chuka, we see the 91, 182, and 364-day paper from the Treasury bills auction. They were all oversubscribed with stop rates at 15, let's say, during range of 15 to 16%. What does this tell us? What does this demand from investors tell about the sentiments and liquidity in the markets?
Thank you, Will. Like you mentioned, the NTB for yesterday was hugely oversubscribed. We have less than 300 billion on offer, and then over 1.1 trillion was the subscription, and then DMO sold slightly lower than what was offered, and so that shows you the demand in the system. The demand is in two ways. One, you have liquidity, of course, playing a major role. System liquidity, there are a lot of OMO, and as well as NTB maturity this week. So well over 600 billion matured. And then, of course, investors want to reinvest some of these maturities back into the fixed income market. And so we saw liquidity play a major role. The second one is the fact that the government through DMO has shown the appetite that they are not aggressively looking to borrow from the local market. And then so the yields are not as favorable, or as they're not in panic mode. Let me use the word. So the yields, they're willing to to bring the yield down as much as they can, so that the cost of borrowing will be less in terms of payment, debt repayment. And so we've seen yield drop well over 200 basis points, especially for the 1 year auction view of yesterday. We saw it dropped about almost 250 basis points from the where it opened the last time, where it closed the last time. So this has actually affected trading today, and then we've seen market trade below 15% for 1 year, and then that's obviously will start the course for tomorrow, and then obviously subsequently next week.
Definitely, we might see this downtrend, persist, especially when the CBN meets much later this month to discuss, rates, and possibly a rate cut might be in the offing. But let's look at what's also happened in the markets. FMDQ has just reactivated that interbank two-way quote system for the fixed income secondary market. Can you briefly explain what this is about and what this will mean for price discovery in the markets?
Yeah, so thank you very much. Prior to now, about 7-8 years ago, the fixed income market as well as the FS market was traded in what we call two-way quotes, where a bank calls for bid and offer quotes, using the platform. And now it's we're using a Bloomberg. Then it was Reuters. And so basically, what it means is that you're meant to show an offer, and then as well as show bid. So the counterparty can either pick your offer or dump on you, as we call it, depending on what the counterparty intend to do. So this was stopped, not officially. It was stopped because market became illiquid. Of course, also as a result of the economic situation at that point in time, and so market became illiquid, and then of course we had a situation whereby traders, we default, which is not good for the practice of the market. But now with the CBN and then of course FMDQ partnering, mandating that traders, banks should go back to two-way quotes. That is what we've seen over the past 1 week. Now the advantage of this two-way quote thing is the fact that it will bring a lot of professionalism into the system. That's number one. Number two, markets will be more liquid. Price discovery, will become, something that is what will become, a good thing in terms of, trying to know what the market is all about. And most importantly, market will be liquid. And so because before now, basically, what we've seen is that the major players, play more on the brokerage side. Now it's more transparent. It's more, the traders are able to know what exactly market is doing. And so for me, it's a good thing. It's a good development. The system will benefit largely, due to the fact that the market will be liquid, and then investors will have more confidence, coming into the fixed income market.
That's fantastic news. But we do know one of the key rules of this two-way quote is that there's a spread cap of 1 naira per 100 naira value. How does this lead to? Does this spread, this cap of 1 naira, would it lead to tighter bid-ask prices and better pricing for investors, especially?
So the basic thing, I mean, one of the fundamental or the major advantage of this two-way quoting is the fact that there is professionalism. So, for example, each instrument for treasury bills, you have a minimum. You have a particular spread. For treasury bills, you have a 250, which is the trading volume on the RFQ. RFQ means a request for quote. And then for the bond side, you have a 100 million per trade, which is the trade volume now. And the bond is traded on the benchmark, which means you load your prices and then you allow the counterparty to either pick on you or dump on you. And so now the spread, which like you mentioned is a 1 naira spread, will cut across board. Everybody knows that this is nobody is going to default on that, and that's the beauty of it. And don't forget that this market is traded on the Bloomberg platform. And so the platform itself is very transparent. Whatever it is that is done on the platform is there for everybody to see. And like we say, as traders, your word is your bond. So if you do a trade, there's no way you can default on it. You must be able to settle that trade. So basically, I mean, it's all good for the Nigerian market, especially the fixed income market. The transparency will come back, liquidity will come back, in terms of flow, and then the market will be very liquid as well.
Definitely, there will not be arbitrary profits. Nobody just setting any rate in the market just by having this two-way quote, which is fantastic for good news for investors. Now, the borrowing calendars, we saw that yesterday, they were out 2 days ago. What is your outlook now, looking at the market for the second half?
So if you see the borrowing calendar, you will notice that it's also in line with what we discussed earlier as regard a trend in yield. Yield is trending downward, which means that the government is not so not so pressured to borrow. Now the calendar, if you look at it, you see that about 1.9 trillion within this calendar period will be maturing, and then less than that is what they are offering. So what shows you that the government itself is not, like I said earlier, is not pressured to borrow much. Now, what are we going to see? This yield is going to continue to drop. Earlier, sometime in February, I said that towards the September ending, we see a drastic drop in yield. However, it's not enough to that, because we've seen yield drop well over 400 basis points between April and now. And so this is going to continue to drop more. The thing about fixed income market is that it's an opportunity market. If you don't get in when you're supposed to get in, what I mean is if you don't buy when you're supposed to buy, you get into problem. If you don't sell when you're supposed to sell, which is getting out, you get into problem. So from now, a lot of those who bought at 21, 22 levels, obviously are selling off. And then because the market itself, the liquidity obviously drives the market. And so you'll see maturities every week, every month. And so most of these investors wouldn't want to just allow, the liquidity just stay by, especially with the inflation issues. So they will want to reinvest it. So what you now see is that you see bullish sentiment all over, and the market will continue to buy, and then yield will continue to, to trend downwards. And that's obviously what we're going to see between now and then, probably October, and then towards the end of the year.
Okay, from what you're saying now, are you expecting when the CBN meets that maybe are they going to hold or cut rates?
I think with the what's inflation figure, don't forget CBN decisions are strictly or mainly, majorly on the inflation, what inflation is doing. And so the last inflation came out okay. For me, I think that they probably will just maintain or, probably cut rate by about 50 basis points. It's too early to tell anyway, but I think they will work within these two parameters I've just mentioned.
Thank you so much, Chukwuemeka, Chief Dealer and Group Head Trading UBA, for sharing your perspective on the show.
Thank you very much.